You're listening to Navid Moosa of the Mindset Movement. Good day, good people. My name is Navid Moosa. I'm your host today and always for the Mindset Movement. Today, we are continuing our small business series about business discussions, creating your basically cradle to the grave, getting your business up and running, how to get your insurances in places, your LLCs in places, your S corps in places, and all that good stuff there. And today, I'm joined by a friend, a business colleague of mine, Bladimir Mercedes. Bladimir is from American Capital Express, and he has helped hundreds of thousands of people basically grow their business from whatever scale they want. And so, in continue the spirit of small businesses into big businesses, we all know money needs to be had, right? We need money, access to capital, and to grow. Scared money makes no money. All these sayings are out there. So, at the end of the day, how do we get it? We're a brand new business. We only started 2 days ago. You hear these stories, other people's money, all this kind of stuff. But what's the real behind it? What's the real stories? How do you really do it? I don't like giving inflated dreams. I don't like doing a whole bunch of stuff. And that's why I asked Vlad to come, because Vlad's my main man. He knows how to break it down. He doesn't tell you maybe what you want to hear, but he tells you what you need to hear because it's the truth. And that's why I like this dude. So without any further ado, ladies and gentlemen, Bladimir Mercedes. Go ahead, man.
Thanks for having me, Nabi. I really appreciate the invitation and honor to be here in your podcast today. And hopefully we can deliver some value to some people out there. As I always say, business credit, funding and credit, they're not the sexiest subjects and it's hard to make them interesting. But if you're seeking, you shall find. These are things that they're very factual and straightforward. So hopefully we can deliver some value to your audience.
I know you can. I'm not worried about that. Yeah, I'd rather talk about this than talk about insurance. When I had to do the insurance talk, that was boring as boring can be. But it's a necessity. You need the insurances, right? Because you understand. You built your brand, you built your business from no one gave you a handout. You built it from the bottom up. So all that hard work needs to be protected, right? And that's what insurance comes in, right? So for you, I'd rather talk about capital because everyone wants to know. I have a great idea, but how do I get it on the paper? How do I get it funded, right? So let's talk about that. I want to hear personally, I think my audience would like to hear, like, I'm sure there's a lot of fake information or misinformation out there in the social media world, right? You get these
on every subject,
on every subject, right? And funding, money is a very sensitive subject. It's a very bodacious subject. It could be very exaggerated. But that's why I brought you on. And that's why I'm glad you accepted. I wanted you to talk about that, please. I wanted you to please talk about what can people, like, can you walk them through the steps of, hey guys, if you're just starting, this is what I recommend you get in place. And then once it's in place, how do they start applying for business credit?
Absolutely. I mean, interesting. And thanks for breaking it down, because when you're talking about funding, you can talk about many different stages and many different types of entities, many different businesses. But for somebody who just started out there, right, maybe that's a great part of your audience. If you just started your business right now and you have a business idea, you just recently formed the corporation or the company, LLC, whatever structure it is that you form. One of the most interesting ways for you to start is try to take inventory of what you already have in order to create a funding strategy. And I'll explain. If you already have excellent credit, excellent personal credit, and you just formed a newly formed LLC, there might be ways out there in which you can get unsecured funding for that company that you just recently formed with very little, and most of the times no financial information on the company, just based on estimates. That's one way. Do you have assets? But assuming that you don't have any of that stuff, and maybe your credit is a little bit poor, or you have some challenges, as a lot of Americans do, what I would start is working on that very quickly, because you're going to need your personal credit at many stages of your business, the beginning, the middle, the end. It's a must-have. It's a commodity. So your personal credit should always be the best it can be, or you should be on your way there. You should be running towards better credit. That's a fundamental advice that I give to anybody that I talk to, any business owner, because you quickly find out how necessary personal credit becomes. So that's the first step. Second thing is a strategy to build credit for your business. It's a new subject to some people, sometimes a little bit unknown, and hopefully we can get to talk a little bit about that and break it down. Business credit that is independent from your personal credit does exist. It has to be intentional. So those are the things that I recommend when you form an LLC at the very beginning. Work on your personal credit. If you already have excellent credit, you might be able to take advantage depending on what kind of money you need. And also, if you really want to dig deep and take it to the next level, start working on building credit for that company. It will pay you in spades in the future as your business grows. So those are the basic recommendations for somebody that's just starting out.
So having said that, like, so to listeners who have, now there's different forms of bad credit, right? There's the bad credit where you just have a lot of, repo discharges, collections accounts, medical bills. And then you have bad credit where your DTI, your debt to income ratio is high too as well.
Utilization, yeah. Utilization of your, yeah.
Yeah, and then so a lot of the clients who I speak to, and then obviously I'm a real estate. I have a lot of people in different venues of small businesses, and what they're doing is they are using their personal credit to finance their business, which is, I guess, standard initially.
It's very common.
Okay,
very
so
common.
how does one, to your comment, to your remark of, first thing to do is if you have bad credit, kind of work on it. Do you offer credit repair, or do you recommend credit repair? Is that something you can touch on, or I'm not sure?
Yeah, absolutely. I can be a resource if you don't have, a person already. Everybody's, credit repair guys are like real estate guys. Everybody got a guy, right? If you don't have a guy, then yes, I am the CEO of a credit repair company. We've
Okay.
been helping thousands of clients, for the past 13 years. So you can certainly reach out to me if you want a consultation
Perfect.
about your credit, and I can turn you to one of my consultants in that entity, or I can do it myself. But yeah, you should always kind of know where you're at. You mentioned two things, like if the problems on your credit are severe, where you have derogatory information that's affecting you, problems that you had in the past, missed payments, repos, you name it. You should always do a consultation, again, to take inventory of where you're at. Because as I said from the very beginning, we're gonna frame the conversation around some fundamentals. One of the fundamentals that I preach and that I practice is you should always be working towards better personal credit no matter what, because it's always going to come up. That's first and foremost. So if your issues are negative info, errors that you might have there, misunderstandings, you should get somebody that understands the credit system, the Fair Credit Reporting Act, to give you a consultation and to tell you steps that you can take, or perhaps a service that they can offer you in order to make legitimate improvements on your personal credit. If your problem is utilization, that means you don't have missed payments, your credit is great, and you're basically just using personal cards to fund your business ventures. There's another way to do it. As soon as you can get caught up with those payments and pay those cards down and raise the score, you should be seeking business credit cards instead. That's that's something that's very relevant to what we're speaking about today. Business credit, right? Business credit cards. So there's another way to do it. However, if you're maxed out on all your cards and your score is low, it's going to be very difficult for you to get a business credit card. So that's why it becomes like a catch-22 situation where you must bring down that debt to raise the score if that's the issue, and then come up with a strategy to get business credit cards that only report to the business credit reports. Therefore, they don't kill your utilization and kill your score every time you max them out.
Yeah, see, so, and guys, those who are listening to this, or if you're watching this on YouTube, whatever, this is why I like Blad, right? Because you're like, well, how do I do that? Listen, you have to be disciplined in your business. When you're an entrepreneur, you have to discipline yourself. Yeah, you spent the money, but the money you spent was an investment to your business. So now, if your business is really making money, you should be able to pay off some of that personal debt that you incurred building your business. So you got to start paying those credit cards down. Again, I personally get upset or just passionate when I hear people and they're like, oh, if you got bad credit, you can get this. Yeah, it don't matter. It does matter. It does matter. You're not buying a car here at a 25% interest rate, for crying out loud. You're building your brand, you're building your business up. So if you are maxed out on your cars, like Vlad said, you got to create a plan. create a plan to start paying them down, and then then you go apply for the business credit. But that's where, I mean, and Vlad, please speak on this if you don't mind. And I don't know if you guys do this or not, but do you guys kind of do consulting of saying, well, here's what your personal credit is as far as your cards. If you can get them down to this much, then come see us. Do you guys do any kind of like a
Oh yeah,
transition?
yeah, 100%. We
Okay.
have again, I'm involved in multiple businesses. They all kind of tie uh, on one another. They're relevant. I get into relevant business, so personal credit, credit, business funding, business consulting, and real estate investor. Those are kind of the things that I'm involved in, and I have separate entities for each one of these things. But it's for a reason, is because I build my businesses around a need that my existing clients already have. So the whole thing started with personal credit, and then it went into business credit, and then it went into funding. So because I had a lot of business owners who had credit issues, so I've built the entire operation or operations around the needs of my clients. So yes, when you when you come to us for any type of consultation, I'm probably going to ask you a lot more questions than answering them at the beginning. That way, I know what belongs to just so I can be relevant. And I'm going to start with your personal credit in pretty much every case. And if we do a consultation, I can make recommendations. I can tell you where the issues are. We can explain it to you. Any of my credit report consultants can do that as well. We can explain the issues to you. That way you understand where you're at. Again, taking inventory or where it is that you're at. That way you can make the necessary changes. You know, it's going to require some action. These things don't fix themselves. And a lot of the work is going to come from you. Because just knowing what to do is, I think, it solves 50% of the problem. Some people just don't know what to do, where to start. So if we do look at your report, we let you know this is where the issues are. You have to pay these down before we can go for business credit cards. This negative information is affecting you also. So these might have to be resolved before you can get these business credit cards. And if we do send you to the program for a review, the funding company lets us know exactly what it is that you need to do if you get the client as well. So,
You definitely do give a path. Yeah, you don't just say, hey, go do this, come back when you're ready. You say, look, here's your to-do list, here's your task. You got to get these done. So you, like you said, a lot of people, they don't just know what to do. But if you tell them kind of what to do, you give them a homework essentially, then
yeah,
that's it. It's on them.
it's like like, what do you need us? It's like, why don't I go directly to the client? Might be saying, why don't I go directly to a bank and try to apply for these things? Well, the bank is going to be very ambiguous when they give you answers and when they decline you. They almost never tell you the exact reason why they're not doing business with you or why they're turning you down. They might give you a very compliant, vague way of adverse action letter or some stuff like that. We break it down to you at the very least. We let you know exactly in a very realistic way and objective. Again, we know you have big shoulders and you rather have the truth, and we tell you exactly where things are and what it is that's keeping you from getting an approval to the best of our ability.
So let's talk about, you mentioned business credit and then business funding. Can you kind of talk about what kind of business credit do you provide? Is it like to like is it business credit cards to stores? Is it like a generic one, like a Visa and Amex? Can you kind of elaborate on that part there?
Yeah, sure, absolutely, Navid. So one of the things that I want your audience to learn today is that business credit is its own thing. So I also don't want to confuse business credit with business funding, or I don't want to confuse business credit with business credit cards, because business credit cards is just one product. So how you have a credit score for your personal credit, you have Experian, and you have a credit profile there. You have one with TransUnion, and you have a credit score there that's based on the information based on that report. And then you have your Equifax and credit profile, and then you have a credit score that's based on the data that's in that credit profile. Well, how you have it for your personal, businesses can also have a separate, totally different model business credit profile. You can have these. The only problem is there's a couple of misconceptions. It's not automatic. Okay, so you have to be very intentional. Most likely, you're going to have to build it. And it's not going to happen by accident. Almost nobody that I know, I know businesses that are been in business for decades and don't have business credit. It has to be an intentional process. So that's what we call the business credit building process. So if you start a company out there, you must have an entity. You must have an EIN for that entity. You must have, for that entity, you must have a bank account. You're gonna have you want to have an online presence, an email address, and a phone number tied to that address. That address, most likely, you don't want it to be your home because of credibility issues.
Of course, yeah.
And then you're gonna have to start buying stuff and developing payment experience with the credit bureaus. And the credit bureaus that are most common for business credit are Dun & Bradstreet. Everybody knows about Dun & Bradstreet. They know who they are. Very few people understand what they do. They're a business credit data furniture, among other things. And then Experian has a business credit profile for businesses. And so does Equifax. TransUnion is it's not popular and I don't think relevant in that space yet. But you want to build business credit that is completely separate from your personal credit. And that's what we know as business credit. Now that service can be, the process can be very tedious and confusing for people, especially when you're starting out. It can add to the cost of, creating the business. You might not fully understand it, therefore not even feel like you need it, but it's a very powerful combination. And for those that are intimidated by it, if you rather pay, like some people do, do what you do best, delegate the rest, pay somebody. There are services out there. We offer that service as well that can kind of provide you all the coaching, all the resources necessary if you're a good fit and you're interested in building credit for your business. But business credit is one thing and your personal credit is another. When you combine them together and you throw other things into the mix, the banks literally love you. They will love you because you will be automatically showing a very high level of sophistication when you have a business credit score. And then you combine that with a real business, they love it. They just love it. You're not gonna have bad experiences by having excellent business credit.
Yeah. Now, by default, does the bank pull your business credit, or do you have to tell the bank, "Hey, I have a business credit. Here's my DNB, my Dun & Bradstreet number."
Most banks in the U.S., charter banks that are dealing with business products, they're on board with business credit at this point. At the day and age that we're at right now, your front end bank rep, customer service representative type of person might not be all that familiar with, but all underwriters are. They're pretty much, some banks rely on it more than others. But like I said, once you build it, they will come. And I know that's a cliche. That's like a phrase that I love.
True. It's true.
If you build a business credit, that you will find the banks that are on board with you, and that will reward you for some of the efforts that you put into running a business the right way and building credit for it, because it does take effort. And then you get rewarded by having higher credit lines, and sometimes you get certain products without a personal guarantee that might or might not be important to you right now, but it could be if you have multiple partners involved in the transaction, and those things become very relevant as you grow. But most banks are familiar with business credit. They know what it is. They have the ability to pull it. I almost want to say all of them. I haven't recently found a bank that doesn't know what business credit is and that doesn't have access to them and who doesn't use them. So all the entities that I'm dealing with, they're pretty big on business credit.
And is that by default, or do they ask you if you have business credit
they'll just pull it. Sometimes they won't even ask. Most business, and that goes to the level of sophistication that you're getting into. Most businesses don't have business credit, honestly. So you're basically a minority when you're doing something like this, and so they just try to pull it. If you don't have it, they're gonna default to your personal credit, and some banks use a combination of both. They'll pull your personal and your business credit, and if you don't have it, they'll just use your personal. They have their own scoring factors in there that uses a hybrid.
So now let's talk about business funding, that's different than business credit, right?
Yeah, business credit. Yeah.
So let's talk about business funding. What is that exactly?
Well, business funding is just the ability to raise money for your business. It's their business loans. The business funding could be an SBA loan. That's business funding. A business funding could be even vendor credit. If a vendor is giving you credit, 30 days or 90 days credit, that's almost one form. I mean, it's vendor credit, but that's one form of funding, because you can, in some business, you can float that. Business funding could be a private mortgage, like if you're buying a property and the property is the asset, and then you're a real estate investor, a private mortgage can be considered business funding. But we're going to stay away from that, because everybody knows that that's a platitude. So
Yeah.
business funding is business credit cards. It could be a high risk loan, like a cash advance, that's considered business funding. It could be a line of credit that you have access to. It could be a term loan. That's business funding. Business funding is basically the ability to fund your business, to borrow debt, basically. So there's different products out there, and I don't know how deep you want. I know we only have an hour. Like I say, I find out that every time I get invited to these podcasts, I blink and then the thing is over.
It is.
It can go pretty quickly.
We could go days on talking about money. That's what I said. I'd rather
They
talk
do
about
boot
this.
camps. They do boot
Yeah.
camps on these subjects.
Yeah, exactly. So no, and so I mean, the whole purpose of this, like I said, is just to get a dialogue started, just to get like the fundamentals, because I don't want to get. Again, it's just like I said about the whole thing of misinformation out there, that I just don't want people to think, hey, you know what? I'm going to start this business, quit my job, and go do it, and the money's going to be there because somebody on TikTok gave me a 15-second video that I can do this, right? So it's like I don't know how long you've been in the business, but I know it's been just as long as me, if not longer.
15 years. 15 years.
Okay,
Prior to that, I was in auto finance, and I've
all right, so there you go. So same thing, 15 years as an agent, 20 years as in real estate in general, but you get it. And again, that's why I wanted you on here, is that right now, I don't know if you're seeing it, but in general, I know what I'm seeing is a lot more younger investors, which is great. They're younger, they're 18, 20, 21 years old, age, and they want to talk about IRAs and investing and house hacking and stuff like that, which is awesome, because at that age, I didn't think that way.
That's great.
But I want to make sure that they're properly educated, right? So people like you, people like George, people like, I have a, my personal CPA is going to be talking another week, just to give a basic outline. Now, we're not going to get into the meats and cruds, because like you said, we could be here for days on that there. I just really want the listeners and the viewers to know, A, that here's the real deal, number one, or A. B, they now have someone they can contact, right? So actually having, when we're done with this, I please, give your information, your contact information, your colleagues, whoever, just to sit with you and talk with you, so they know what their options are, right? And you touched on business credit, business funding. So, we're going to kind of wrap this up here, but let's talk about how do they all play together, right? So if I'm if I'm a plumber, if I'm an electrician, how can I leverage my hard work, my efforts? And I'm coming to you and I say, Blad, bro, help me out. What do I need to do to leverage this to the max? What would that conversation be like?
Yeah. So if all the stars line up, if you master your personal credit, and you have managed to build credit for your business, and you have a real business, meaning an entity that's already thriving, like you say in the case of a plumber, right? We're assuming that you already have an operation. You're going to find yourself as a very favorable borrower as a business. You're going to be in a very low percentage of the population of businesses. Again, excellent business credit, excellent personal credit. And by the way, business credit is something that is it's very intentional. You can control it. You can actually all you have to do is pay on time. Once you do everything that you're supposed to do. So I'm not gonna say it's easy to do, but it's a lot easier than some of the stuff that goes on with your personal credit. But when you're in that situation and you have great personal credit, you've built business credit, and then you have a thriving business, a real business, or even if it's a startup, you have a real path to something that you want to do, then your options are going to be greater. First thing that I ask a client when they come for funding options, which is one of the main things that we do, is, what do you need the money for? What exactly is the loan for? And I know we're still in the middle of a pandemic, so it's really a crisis out there. The government has stepped in, and they've thrown trillions of dollars into the system. Trillions. I mean, that's even hard to say. It's a mouthful even to say it. So believe it or not, even though there are funding options right now, things are tight. But that's a greater opportunity for your audience to build things the right way and be the person that has a business credit profile already built, and who has either master or on the way to master their personal credit. So to answer your question, the way these things start up is just you're going to get higher options. You're going to give less excuses to the underwriter to kill the deal. If you're going for a traditional business loan, if you're going for lines of credit with your bank or with a bank or with any lender, it's just you're going to stand out as somebody who is going to be a lower risk because of these things. These models are based, they're created as predictors of risk. That's basically what they are. The higher the score, they're less likely, according to the computer and to the numbers, and the numbers are very objective. You're less likely to default. That's basically what it is. So they're more likely to give you the money when you. That's how that all ties up together. Is if you have these three things, you have a business, you have business credit, and you have great personal credit, you are going to have access to greater loans and more options. And we can go into each one of those options individually, but again, it varies and they can be very long conversations. You're going to get higher loans, higher credit limits, higher credit lines, and less no's ultimately.
So who can contact you, who cannot contact you? Is there's like a certain business? Hey, I don't deal in that realm. Is there someone who cannot contact you who needs a business loan?
No, not really. I mean, we cater many industries. There are industries that cannot get certain types of loans, but again, as funding consultants, our job is to have a range of products for clients. If you're interested in getting funding and you have funding needs, you can certainly, and you have a business, you can certainly contact us. If you have credit issues, you can contact us, and I turn you into one of my credit repair consultants. If you want to build business credit for your newly formed entity or for an existing business, you can contact us. So there's very few no's. And again, when we have the conversation, we can find out if we're fit for each other or if we have something of value for you. If you're looking for small business funding, even if you're a startup, if we can't get the loan for you, we might be able to send you in the right direction at the very least. So yeah, not a huge filter there for people who cannot contact us.
Okay, cool.
Well, as long as you have a business,
Yeah. No, so I mean, here, since we're wrapping this up, please give your contact information, email, website, whatever you want to give. Please go ahead.
Sure, absolutely. So you can get in contact with me and my companies by going to AmericanCapitalExpress.com. Everything's spelled correctly. AmericanCapitalExpress.com. There's a contact form there. You can certainly just submit your info. It'll get to me. Also, you can email me to funding@AmericanCapitalExpress.com, same domain, funding@AmericanCapitalExpress.com. You can send me an email there, and either myself or one of my funding consultants will get back to you.
Okay. And are you nationwide, only certain states?
Yeah, nationwide, absolutely. We don't with the type of business funding there's very few restrictions and very easy to work across the country at a national level. And all of the lenders that we work with are national lenders. They lend anywhere in the country, all 50 states.
Cool. Well, thank you very much, Brad. I really appreciate it. And for anyone listening, I apologize. I'm at home. We're having some work done at the house.
Everybody's at home. What are you talking about?
That's how to move. I'm like, oh my God, they're drilling outside. Anyways, listen, guys, again, another great guest. Vlad, thank you very much. I know you're a busy, man. I know it took time to get this together. You're always traveling, doing something. I envy your life, man. I love how you travel. You don't take everything too seriously, but you are serious about your grind. You're passionate about your clients. You're passionate about what you do. And that's what we want to deal with here at the Mindset Movement. It's not just about real estate. It's not just about a business. It's about the mindset of what you need to get where you want to go to. So thank you, everybody. Thank you, Vlad. And like I say, each and every week, I say the same thing. Do right by the client and everything else will fall into place. I promise you. Just take care of the client. Don't focus on the money. Everything else falls into place. Take care, guys. Have a great week and be safe out there.
Thanks
Thanks,
for having
Brad.
me.